Hello friends, welcome back to our channel. Today we are starting a new risk management series which will give you a brief about risk identification, risk assessment, risk evaluation, risk treatment and preparing risk register for your organization. So without wasting any time, grab a notepad and let's begin. So what is risk management? Risk management is the process of identifying, assessing, and mitigating potential risks that could impact an organization's ability to achieve its business objectives. It involves a systematic approach to identifying potential risk, evaluating the likelihood and potential impact of those risks, and developing strategies to manage or minimize them. Risk management helps organizations decide what countermeasures to take in reducing risk to an acceptable level. Depending on the type of risk and its significance to the business, management and the board may choose to take countermeasures like reduce, mitigate, or avoid, or accept, or transfer the risk. Right? So there are different types of risk. Strategically, we can classify them into five types of risk. One is financial risk, like any risk that impacts the financial health of the organization. For example, insufficient cash flow can hamper the production capabilities. Lack of working capital can also impact that, right? So there is another type of risk which is called as operational risk, the risk resulting from ineffective or failed internal processes or systems. Suppose we are following any process which is outdated or might not be updated, then there is a chance of operational risk. What is legal risk? So legal risk resulting from the negligence or a deliberate failure to comply with client obligations. It usually involves a breach of contract. For example, you signed an agreement or contract with any vendor, and if he is not complying or if he is not following the SLA, or if he is not complying anything, then there is chances of legal risk, right? What is reputational risk? Reputational risk, any event which can affect reputation or goodwill of the organization. And regulatory risk, failure to comply with laws of the land, right? You you have to be updated about the changes in laws and regulations as per the different countries which you are dealing with. Like there is a law in Europe which is GDPR, General Data Protection Regulation Act. So if you are dealing with the European countries, then you need to comply with this law for data privacy. And there's another law, HIPAA, in US to safeguard medical and patient information. HIPAA stands for Health Insurance Portability and Accountability Act. Yeah. So, yeah, these are different types of risk. Moving forward, how to develop a risk management program. So, in order to develop a risk management program, first you need to establish the purpose of risk management program. The purpose of risk management program will help you to identify, evaluate, and plan for possible risk that may arise. Typically, senior management with the board of director sets the tone and goal for the risk management program. The second step in developing a risk management program is assigning responsibilities for the risk management program. Right. So there should be an individual or team who will be responsible for developing and implementing the organization's risk management program. A successful program requires the integration of risk management with all levels of the organization, right? Suppose if you develop a risk management program, then you cannot do it alone by yourself. You have to get involved with different stakeholders while preparing an enterprise risk management, right? So operations staff and board members also should also assist the risk management committee in identifying risk and developing suitable countermeasures and the strategies. So Before we move forward to the steps of risk management, it is very important to understand different definitions which are used in risk management program, and you will keep on hearing these terms again and again in upcoming slides as well. So what is a threat? A threat is a person or thing likely to cause damage or danger. A threat is what we are trying to protect against, and it is often a negative scenario which you want to avoid. Example like fire, earthquake, hacker, terrorist, right? What is vulnerability? Vulnerability is a weakness or gap in our protection system which can be exploited by threats to gain unauthorized access to an asset. Vulnerability is a weakness that can be exploited in order to attack you. After exploiting a vulnerability, attacker can install malware, attacker can steal the sensitive information, or he can run the malicious code onto your computer, right? So what are the chances, like what are the examples of vulnerability? So suppose if you are using a system and you are not having antivirus on that system, then it is a weakness, right? And lack of CCTV monitoring. You have a security command center, but there is no one to monitor. So yeah, that is a vulnerability that can give access to unauthorized entry or any unauthorized activity if you are not monitoring it continuously. What is risk? Risk is the potential for loss, damage, or destruction of an asset as a result of threat exploiting a vulnerability. So as we move forward, we will discuss the concept of risk more into details. What is a probability? So probability is the chances, likelihood, we can also call it as a likelihood, is chance of risk occurring. How likely the risk event or the condition is to occur. It is usually an uncertain dimension. How probable it is for any event to occur. Like we can take an example like once in 3 years or once in 5 years. Suppose if we take a example of maybe flood or earthquake, it is very rare incident and it does not happen every year. So in that case, we'll take it maybe once in 5 years or maybe once in 10 years. Let's understand more about probability by an example. Suppose there is a firecracker industry, right? So the risk of occurring fire in a firecracker industry is usually more. We can say there will be 60 to 70% risk of getting fire into a firecracker industry. So the probability will increase in this case, right? And what is the impact? So impact is cost of risk if it occurs. What is the cost? What is the financial impact? There can be um, other impact as well, but usually we calculate this in terms of dollars or rupees, how much our organization will be impacted. The extent of what would happen if the risk is materialized, right? This can be financial, reputational, or loss of life. The example which we have taken, the firecracker industry, so there was a probability was more than 50% of fire, right? If there is a fire in that industry, then impact is going to be severe. There will be financial impact, there will be loss of life, and there will be reputational impact. So that's how we calculate the impact. So just keep these five terms into your mind because you will keep on hearing again and again. It's very important for us to understand a relationship between risk, threat, and vulnerability. I have created a video which I have published on my YouTube channel about relationship between risk, threat, and vulnerability. So we'll understand that what is relationship between risk, threat, and vulnerability. So what do you see on your screen? You can see there is an asset, there is a threat, there is a vulnerability, there is a risk, there is a protective measures. So what is our asset? Our asset is diamond, which you can see. What is the threat? Threat is the thief who will try to steal the asset. What is the vulnerability here? Vulnerability, you will see that gate is open. There is no access control and asset is lying just without any access control. So The attacker will the threat who is a thief will exploit the vulnerability. The vulnerability is the open gate or no access control, and he will take away the asset. He will take away the diamond. So how we can how we can control this risk, how we can control this vulnerability. So what we will do, we put some countermeasures. So our vulnerability was open gate, so we will put some countermeasures and we'll keep that asset into lock or safe, or we'll put some access control measures. So you can refer to this video. I'll post that in description. You will get a better understanding about relationship between risk, threat, and vulnerability. So what are the steps which are involved in risk management process? The first step is asset identification. So the first step in the process of risk management is the identification and collection of relevant data to enable effective IT related risk identification, analysis, and reporting. This will help to identifying information resources or asset that needs protection because they are vulnerable to threats. So first we should have the list of our assets, be it physical assets, be it information assets, or any department, they should have the list of assets. All asset owners, which like security assets, asset owner will be head of security. If there is IT asset, head of IT will be the asset owner. So all asset owners should have their asset inventory with them, so that, because if you don't have if you don't know what you are trying to protect, then how you will protect, right? So the first step is asset identification. There can be different assets which are involved usually in IT environment or information security, like information and data, hardware assets, software assets, hardware assets like laptops or access points or firewall, the hardware firewall I'm talking. Software assets can be any applications which you are using for vendor payments or maybe material movement. Documents can be there can be any document which keeps on lying on the table. So these are the documents. And personal, like employees are also assets. So head of admin is also an asset. All the managers are also an asset, because if they move out from the organization, they have the information with them. So if they move out from the organization, they can share that information. So confidentiality will be breached, right? So that's why all the employees of an organization are also an asset. Moving forward, the second step in risk management is identification of threats and vulnerabilities to our assets. As we already discussed, vulnerability is a weakness or gap in our security system. Risk occurs because of threats that have potential to exploit vulnerability to cause harm, right? Example of vulnerability can be lack of user knowledge. So if there is a improper training about using the information resources, then there can be vulnerabilities. If user is not aware which websites to visit, and if he's using personal mail on the system, if he's using social media, then yeah, that gives rise to risk, and that is a vulnerability in our system. Lack of security functionality, poor choices of password, untested technology, no access control at critical buildings. So these all are the examples of vulnerabilities. For a vulnerability to be realized, there must be either a human or environmental threat to exploit the vulnerability, right? So as we discussed, threat is a person or thing which can cause damage or danger. If we talk about information assets, threat is any circumstance or event with the potential to cause harm to our information resource. So harm can be destruction, disclosure, modification of data, or denial of service, right? So as we discussed that all employees are also assets. So here if they go out, they can disclose the information. So that's why they are also our assets. We can classify threats into two types: caused by human and caused by environment. Human threats or threats caused by humans like hackers, criminals, terrorists. Environmental threats includes like flood, earthquake, right? Yeah, so step 3 is the most important while doing the risk assessment. So there can be, I have explained risk management process in 5 steps. There can be 6 steps, there can be 7 steps, there can be at 8 steps. So depending on the organizations, there can be different steps, but the concept remains the same. So now step 3 is evaluation of the impact. In step 3, we will do impact analysis and likelihood analysis based on impact and likelihood criteria table. As we discussed, likelihood is what are the chances of that threat exploiting a vulnerability, and impact is how it is going to affect us, what will be the impact on the organization. Threat usually result in direct or indirect financial losses for the organizations. What are the factors which we need to keep into our mind while evaluating the impact? It is direct loss of money, loss of reputation, breach of confidence, loss of business opportunity, reduction in operational efficiency, and downtime of critical functions. Suppose if there is fire in the firecracker industry, the same example. So how there will be loss of money, right? There will be loss of reputation, breach of confidence within the management and the other industries who are into the same field, loss of business opportunity. If there will be fire, then uh, I I don't think that the company will be able to recover in a quick time. It will take some time to recover, or maybe there are if there is a small industry, then it will not be able to recover. So that is loss of business opportunities. Reduction, so there is no operational efficiency and downtime of critical business. So we have to keep all these scenario into our mind while doing the impact evaluation. And how do we calculate the impact? So, okay, before moving to the risk impact score parameter, we need to understand that there are 2 or 3 types of risk management practices which we follow. The first is qualitative risk analysis, second is quantitative risk analysis, third is semi-quantitative. So in qualitative, what we do is we use the figures like low, what is the risk, low, medium, high, and in quantitative, we quantify that with numbers, right? So as we move forward, I'll explain that in details. So here I have just taken impact score parameter as an example. Suppose if there is any company which is having a turnover of 5 crores. So if there is any impact which is costing it 50,000, then we will consider it as a negligible. If there is impact between financial impact between 50 to 2 lakhs, then we'll consider as a minor impact. And if there is any critical, if there is any loss to an organization about 20 lakhs, then we'll consider that as a critical, right? So this is not a standard table. It depends. If we do the risk analysis for big organization like Fortune 500, then this impact score parameter will be changed. And if we do risk analysis for any small organization, it will change. So this is just an example. And how do we calculate the likelihood? So likelihood is also calculated by giving the numbers in quantitative risk analysis. That can also depend upon uh, different organization to organization. So if there is any event like the example which we took for earthquake or terrorist attack, so that usually not happen every year. It usually happens after 5 years or maybe 10 years, or it won't happen. So in that case, how probable is that event? How likely, what is the likelihood? Is it going to occur again? So as per that, we give the rating whether it is a rare or whether it is an unlikely event or possible, right? So here is a one more term that is BIA. BIA is business impact analysis, which is used to calculate the impact on critical functions. Every organization should prepare business impact analysis document to calculate the impact on their functions, right? Now moving forward, step 4 is the calculation of risk. and step 5 is the evaluation and response to risk. After all the elements of risk has been established, they are combined to form an overall view of risk. A common method of combining the risk is to calculate the following for each threat: probability of occurrence and magnitude of impact. So probability of occurrence is probability, which we discuss, likelihood. Magnitude of impact is impact score, which we discuss, right? This will give a measure of overall risk. The risk is proportional to the estimated likelihood of the threat and the value of loss or damage. So now the final step is evaluation of and response to risk. Once we have identified the threats and vulnerabilities, we have calculated the likelihood and impact, then we will calculate the risk, and then we will evaluate whether this risk is acceptable to us or not. And then we'll take suitable countermeasures as per our risk tolerance. So after doing the risk analysis, we evaluate the risk. What is the acceptable level of risk? How much risk we can tolerate? And then according to the level of risk, we take suitable countermeasures. What you are seeing on the screen is called as 5 by 5 risk matrix, which includes the impact and the probability of the threat exploiting vulnerability. So how do we plot the risk into this matrix, and how do we calculate whether this is an acceptable risk or an acceptable risk? So we calculated the value of risk by multiplying the probability and the impact. Similarly, we will do it here as well. I'll try to show you one example how we do it. Suppose let's take an example. You are riding on a motorcycle without a helmet. Okay. So what is the vulnerability in this case? Vulnerability is that you are not wearing a helmet. That is a weakness. And what can be the risk? Risk can be fatal, or your life is a risk, right? So we will, if we have to quantify this into this risk matrix, how we will do that? So first we have to calculate the probability of that event. How probable is that event that you met with an accident, or you fell from the bike, or any untoward incident? So how probable is that? So it is like, it is very unlikely to happen. So we will give that a number of 2. And what is the impact? So if you fall from a bike, the impact is going to be severe. So we will plot that risk which we have calculated by multiplying the probability and the impact, and we will plot into this. So the value which comes from the first exercise we did is probability is 2, impact is 5, so the value is 10, and 10 means the risk level is medium. So now, once we have the risk level, we need to implement the countermeasures or the controls you call, so that we can bring down the level of risk from medium to an acceptable level, right? Taking another example, if you are using a system which is not having an antivirus, what is the probability of threat exploiting that vulnerability? So it is likely or possible that a threat may exploit vulnerability. So we will give that rating of 3. And what will be the impact? Impact is going to be a moderate impact, because if you are not having an antivirus, that's not like a life hazard. So yeah, impact is going to be moderate. I'm just giving you an example how we plot it into the risk. So it depends. If you are into organization where data is very important, then the impact might be severe in that case. But normally antivirus is a moderate impact. So if we calculate the value of this risk is probability is 3, impact is 3, the value is 9. So 9 is a medium risk for us. Again, we will put some controls to bring that down to an acceptable level. Okay, I hope I am able to clear you are able to understand how to plot the risk matrix, because this is very important, which you will keep on hearing again and again: probability and impact. Now, once we have calculated the value of risk, and we have plotted that into risk matrix, 5 by 5 risk matrix, we have understood whether the risk is acceptable to organization or not. So if risk is not acceptable to the organization, we will put in suitable countermeasures, which we also call as risk treatment plan. So risk owner is responsible for implementation of risk treatment plan. Suppose I am a security head of any organization. If there are chances of forceful entry or forceful terrorist attack or vehicle-based IEDs, so what I will do, I'll do the risk assessment and then check whether it is acceptable to me or not. Then I'll put in suitable countermeasures like access control for man and material and boom barriers for vehicle. So in that case, I have reduced the risk. I have not completely avoided that risk, because even after putting the countermeasures, risk is present. The risk which is present after putting the countermeasures is called as residual risk. You will keep on hearing this term also. Residual risk is the risk which is left after putting the countermeasure. So in this case of boom barrier, we are reducing or mitigating the risk. The second option is to avoid the risk. For example, you are riding on a bike and you are not wearing a helmet. There is a risk of falling down. How you can avoid that risk? You can go by walking. So you have eliminated the risk. Or you can transfer the risk to a third party. Usually insurance companies are involved in this. Or formally acknowledge the existence of the risk and monitor it. Risk can be avoided, reduced, transferred, or accepted. An organization can also choose to reject risk by ignoring it, which can be dangerous and should be considered a red flag. So we have understood what is risk management, what is threat, vulnerability, and risk, relationship between them, steps to calculate risk, preparing 5 by 5 risk matrix, risk mitigation options. Now the final step is how to prepare a risk register. I'm just giving you a brief overview what is a risk register and how to prepare a risk register. So for preparing a risk register, you should first identify the assets, what are the threats to those assets, and what are the vulnerabilities in our security system. Then we need to identify what are the existing controls we have in place, what will be the impact if threat exploits the vulnerability, and how probable is that event to happen, and how likely is that event to happen. So once then we will have the risk value. We will define the risk owner, who is the risk owner, and what will be the timeline for bringing that risk to an acceptable level. Risk owner will decide whether risk is acceptable or not, and then we will take suitable countermeasures like avoid, reduce, mitigate, or transfer, right? And then we have residual risk assessment. One important point to keep in mind is we also do a residual risk assessment. So the initial risk assessment which we did is also known as inherent risk assessment, which um, we have already done. And residual risk assessment is the risk assessment of risk which is left after putting the controls to inherent risk. So need not to worry, need not to confuse with this residual risk. As we move forward in upcoming videos, I'll discuss more about residual risk, and we will also discuss how to prepare a risk register. I'll show you the complete step by step to prepare a risk register. I have prepared one and will also help you to prepare one for your organization. Thank you guys. I hope you liked this video. It was very detailed video, and I hope I was able to clear your doubts. If you have any doubts, if you need help in anything regarding risk management, risk assessment, or security, then you can comment to this video, or you can connect with me on LinkedIn. Thank you. Have a good day. See you in next video. Bye.